Today, we are wrapping up some of my top end of year tax planning tips and strategies. If you haven't seen my previous videos, go watch those too. Today, we're going to talk about 4 more things to wrap up my end of year tax planning. We'll talk about the home office deduction, the Augusta Rule, vehicle mileage, and investing in yourself. My name is Anthony Brister, and this is the Wealth Planning Podcast with Brister Law. First, let's talk about the home office deduction. The home office deduction is a great tax strategy for small business owners, self-employed individuals, and remote workers because you generally don't have to spend any more money to take advantage of this. You're already using it, so let's get that deduction. If you use a specific area of your home exclusively for business purposes, you may qualify for this deduction. But remember, ask yourself, what are the requirements for the home office deduction? And if you qualify, first, you need a space that is exclusively used for business and regularly used for business purposes. It either needs to be principal place of your business, a space that you meet with clients or customers, or regularly used for administrative and management tasks. There are 2 different ways you can deduct your home office. One is a simplified method. That's $5 a square foot up to 300 square feet. So $1,500 maximum deduction there. Very easy. Just take the square feet that you have and you're using and then multiply that by 5. Or you can use the actual method, which is deducting a percentage of your home expenses like mortgage, utilities, repairs. Um, Based off your home office size, this might be better, and your expenses. Qualifying expenses for this, you have direct expenses, so office-specific repairs are fully deductible, or indirect expenses like utilities, rent, your mortgage. Those are based off of the proportion of your office space compared to your total home. You want to be sure to properly document all of this and be able to substantiate your home office, but don't be afraid to take it. In fact, you should be taking it. Next up, we have vehicle mileage. So the mileage deduction or the auto deduction helps offset the cost for your business-related vehicle use. And here's how you qualify for the auto deduction. First off, you must be using it for a business purpose. So only the miles are driving for a business purpose, client meetings, errands, but not commuting from work to work or going to get your groceries. There's 2 different ways to deduct your vehicle. So we've got the standard mileage rate. What's the business purpose? And then you actually deduct an amount per mile. In 2024, it's 67 cents per mile. The next step is actual expenses. So for this one, you need to actually be using your vehicle more than 50% for business, and then you deduct a portion of your vehicle costs. So like gas, maintenance, insurance. You could take the percentage that you actually use for business, and then you're going to prorate that for your actual cost. That's your deduction that you get. For both of these, you want to make sure that you have some kind of log, some kind of schedule, purposes for your mileage. There's a couple of apps that simplify tracking it. I like using QuickBooks, but be sure to have accurate records. This is an audit topic. It's very easy to mess up if you don't have the records. The substantiation is on you. So be sure to log it, but don't be afraid to take this deduction because it can save you thousands. Third, we have the Augusta Rule. This is a tax-free rental income opportunity for all homeowners. The Augusta Rule allows homeowners to rent out their personal residence to their business or to strangers for up to 14 days per year without reporting that income. So, for homeowners, this is a great tax saving strategy and something you should be considering every single year. For business owners, here's how the Augusta Rule works. First off, you're going to rent your home for your business. You're going to have some kind of meeting, event, or some other business purpose related purpose for renting out that home. You can rent out your home to your business. For that, you're going to pay yourself directly out of your business. That rental income you pick up tax free as long as it's under 14 days each year. The big thing is that you keep records, you substantiate it. You want a fair market value rate of your house. So, if the regular rate's $200 a night in your area, don't go rent out your house or your business for $2,000 a night, right? You want to keep it reasonable. You want to keep records substantiated. The burden of proof is on you, but this is a great way to save a couple thousand each and every year. You can rent it to your business or you can rent it to strangers. Most people don't want to rent their home out to strangers though. So if you do have a business, it's a great way. Just make sure that you actually are having some kind of business purpose, meeting, event, something along those lines. And you're being reasonable with the rate that you're paying. The last thing I want to talk about today is investing in yourself. You are your greatest asset. Investing in yourself is one of the greatest ways that you can increase your value and build long-term success, both personally and professionally. Investing in yourself, unlike any other assets, can have very exponential rewards. You want to be sure to just dedicate some time, resources to personal growth every single week. Start trying to build some kind of skill that will help you increase your income. Take courses, attend seminars, get certificates if that's relevant, right? Prioritize yourself, your mental wellness, and also your physical wellness, right? Build up your network, keep going after your dreams, take that risk. Don't be afraid to invest in yourself. I guarantee it. You invest in yourself, you stay consistent, you won't regret it. So, to wrap it up today, we covered 4 key strategies to wrap up end of year tax planning. So, those are, first off, we want to take the home office deduction. Second off, we want to deduct our vehicle mileage that has a business purpose. Third up, if we have a home, we want to use the Augusta Rule, but be reasonable and substantiate. And lastly, we want to invest in ourselves. Each of these strategies, when implemented right and properly substantiated, can save you so much money and also make you so much money to help build your wealth. It'll set you up for success in the upcoming year. Take action, trust the process, watch your efforts pay off. My name is Anthony Brister. This is the Wealth Planning Podcast with Brister Law. Please don't forget to subscribe and share with anyone who you might think this would help. Thank you.